It's a big day for the auto geeks. China EV makers XPeng and NIO reported dips in sales for January compared to December, likely as the semiconductor shortages rage on globally. Numbers come ahead of GM's results after the close of trading today and Ford later in the week. Julie, seeing some mixed action here in trading between NIO. NIO shares are actually down on their deliveries. NIO saying they delivered 9,652 vehicles in January. Up 33.6% year over year, but that was down slightly from December's total. XPeng also reporting growth year over year, but again, those sales fell compared to December, and that's what appears to be what the market is really locking in on here.
Yeah, I think we got to talk about the context too, because yesterday, U.S. listed China shares broadly had their best day of the year, along with that big surge that we had in the NASDAQ, and also over the weekend, a Chinese government agency talked about the importance of the technology industry. They said internet specifically, but there was sort of a halo effect to the technology industry more broadly. And so the kind of mixed action that you see coming today comes off of really big outperformance yesterday. So that could be something to keep in mind too, Sozzi, as we're looking at how these stocks are doing.
Yeah, you really do get the sense that the semiconductor shortage rages is on. You know, we just talked to Ford CEO Jim Farley last week. Look, he acknowledged that the supply chain challenges are going to persist from time. Now it's really a matter of how is this factored into these companies' outlooks when they report. First up out of the gate will be General Motors tonight. They'll be the guinea pig in terms of guidance, but GM, shares are down 10% year to date. Ford continues to win that battle versus GM in terms of headlines and just, I would say, new product introductions in the electric vehicle space. Ford shares only down about 2.5% year to date. So if you're a GM investor, you really want to hear, how they are, I would say, cost cutting. I think there's a lot of fat there that they need to trim, but also to what extent is the supply chain challenges that they dealt with last year, any signs of easing there, I think the market wants to hear about.
Yeah, it seems like that the car makers here in the U.S. are not yet being rewarded for, at least not to a large extent, for some of their electric vehicle aspirations. Certainly that's true of GM. Ford is being rewarded to a higher extent. But to your point, I really think that the focus is going to be more on those supply chain issues, kind of what's going on now, how many cars are you able to sell now versus the big picture electric vehicle plans of the future. That could change, certainly, especially if Ford later this week comes out with some more numbers and clarity around the Lightning and what kind of demand they're seeing and what kind of deliveries they can actually make of that vehicle given chip shortages. So any kind of commentary around all of that is going to be of vital importance.
You better believe